quick commerce story in India till 2 years ago didn't have many takers or believers, and cut to 2024, people can't get enough of quick commerce, whether it's investors or the markets, in anticipation of some of these companies going public. Joining me now is the new kid on the block, Aadit Palicha of Zepto. Aadit, many thanks for joining us here on CNBC TV 18. It's always great talking to you. But first up, congratulations, another round closed today. You managed to get 340 million in a follow-on round at a $5 billion valuation from General Catalyst. This on the back of the money that you raised literally 2 months ago at what, $3.5 billion. I mean, how do you go from 3.5 to 5 billion in 2 months?
Firstly, Shini, it's wonderful to be here. Thanks for having me, and it's wonderful talking to you always. On the round, so simple philosophy on this financing, right? We obviously raised quite a bit of capital. We're a well-capitalized company, but what I say internally is that the number one rule of life is if you've got high-quality partners on the table and good capital, you should always take it. And we couldn't be more thrilled to have General Catalyst on board. They are a legendary Silicon Valley investor. This is their first large investment in India since they integrated with venture capitalists and brought Neeraj Arora on board.
Yeah.
So we're super excited. And Neeraj has been a personal investor in the company since our seed stage days. In terms of how we went from like 3.6 to 4.95-ish over the past 2 months. I mean, look, the company's growing pretty fast, right? So we've grown in that 60-day period since our last financing. We've grown about 20%. Obviously, we're launching a lot more stores, and you might have seen some of the work that we're doing. We launched Nasik, Ahmedabad, Chandigarh. And I think the inflection point is becoming clearer and clearer to the market. And the downside is largely protected for, because like I mentioned last time, we've got 70% of our stores fully EBITDA and free cash flow positive, turning profitable faster and faster. And when investors saw the downside was protected for, and the business was inflecting, it just made for exciting assets. So that's why we got here.
So you said that this round is really another exercise in strengthening the balance sheet pre-IPO. Yeah. And of course, when we last spoke, you talked about the possibility of an IPO in 2026. Yes. So you said you're well capitalized. Are you looking for more funds at this point in time, or this is it for now?
Look, for now, we're not actually looking for capital, even for.
But if some comes your way, you're open to that.
No, look, I would say that, like I mentioned, it really depends on who the partner is, what the reasoning is, where we are at the stage of the company. See, what I'm most sensitive to today is all these financings, especially as a private company, are largely an execution distraction for management, right? And so the reason why we took this capital is because it was very quick. Diligence was already done. I doubt that there would already be a very quick amount of capital to pick up after this. So if anything even takes a remote amount of management distraction at this phase of the journey, it's not really worth it. So I would say that the likelihood that we raise more capital in the imminent future is unlikely, but you never know, right?
But you've raised what, over 1.2 billion in the past year and a half?
That's right. Yeah.
And I think it's only PhonePe that's come close to that number in terms of fundraise in the same period. So what does this mean now in terms of expansion? What does it mean in terms of aspiration to move beyond the cities that you currently operate in and expand the dark store network as well as more categories to get into?
Absolutely. So we are expanding. Like I mentioned last time, we're launching a few hundred stores, across the next couple of months in, not just existing cities in the metro cities, but even in tier 2, tier 3 cities. And just to give you an anecdote, right? We launched Nasik last month, right? Nasik is not known to be anywhere close to a metro in terms of a market. Yeah. The stores that we launched there have hit 1,000 orders per day in 6 weeks. It's the fastest that we've ever been able to achieve that. Mumbai, Bangalore, Delhi took 3-4 months to hit 1,000 orders per day. Nasik is coming in 6-7 weeks. And the insight really for tier 2 and tier 3 markets is that customers are underserved. There are no real quality online or offline options for them in terms of price selection and quality, and obviously you're giving them convenience.
So is that going to now be a priority and a focus in terms of expansion? Because as you said, these are underserved markets, and perhaps with the kind of growth that you've seen in Nasik, for instance, is it changing your mix in terms of prioritization?
Absolutely. So we plan to launch, the idea is to launch at least a dozen cities over the next 2 quarters. And then we'll expand from there. But right now we've got visibility launching a dozen cities, and that includes Ahmedabads, Chandigarhs, Kanpurs of the world, the Vizags of the world, the Indores of the world. So all of that we're launching over the next 2 quarters, and we'll expand from there. But absolutely, so one, we are expanding geographically. 2, in terms of new categories, I'm glad you brought that up because today one of the big things that even for this financing that really got investors excited is that we launched a bunch of new categories last quarter. We're talking about consumer electronics, general merchandise, high utility apparel, and even beauty and cosmetics, right? And so we launched all those 4 categories. Effectively in the first quarter since launch, it's already doing today, the run rate is well over 1,200 crores of scale, right? Annualized, obviously. But in the first 4 or 5 months of launching a category, you get to 1,200 crores of scale and growing 15-18% month on month.
I want to pick up on what you just said. And I think, I can't remember if it was you or somebody else within the quick commerce community who talked about the fact that what's happening in quick commerce today is what happened with Flipkart and Amazon when they took off, when they really sort of hit that sweet spot as far as the market is concerned. But what was the expectation with quick commerce was that it was going to be low value, low ticket size transactions. Nobody expected that you guys would be delivering on electronics, cosmetics, and so on and so forth. So the lines between e-commerce and quick commerce, I mean, where do you draw those?
It's a great question. Look, and I think the candid reality is that we're still figuring out the answer to that question. I think our entire philosophy on selection expansion is what are customers asking, right, for us to deliver. And we can see that in our search data, we can see that in our browse data, we can see that in the feedbacks, and obviously we can see that in one-to-one conversations. But today all the categories we're launching are coming data-driven, what customers expect on the platform. And what I'll tell you, Shireen, that's interesting is that expectation is evolving over time, right? So if you asked me 24 months ago, or just when you're starting 18 months ago, were people searching for Bode earphones, or were people searching for, let's say, Lakme products? The answer is no. But over time, as people got habituated with the service, they actually started expanding their universe of what they search for and hope for on the platform. So, I think it's impossible to tell, right, how many more categories customers will ask for us. But, if I had to think about it first principles, I think there are certain very high consideration categories that we don't have product market fit in, and we would not be interested in doing.
Like what?
Like smartphones, right? Or, for example, high value electronics. Or, for example, long tail fashion, right? Or furniture, categories like that. And so, those categories I'd expect, it's not a binary 0 or 1. I'd expect a lower degree of product market fit versus categories like meat and seafood, like general merchandise, like consumer electronics, and obviously grocery and fresh. So these high consideration, high stakes, high value purchases, that I think we'll have less product market fit in, and we see that in the data. What's
the mix currently, grocery and non-grocery for you on Zepto?
Without going into the specifics, what I'll tell you is, it depends on how you define grocery and non-grocery, but it's a large chunk. I mean, it's over all like the let's say food items, anything that's non-food, non-fresh, non-meat, etc. That would be about 25-30% plus of the platform in that zone. Again, very, very broad number.
I just want to build on, the skepticism with respect to quick commerce was that, look, how are you going to do this? How will the unit economics work? And what's happening today is that it has taken off. There is a clear consumer buy-in, and you just pointed out that at a store level, you're pretty much at break-even at this point in time, and that's the kind of numbers that Blinkit is delivering on as well. In fact, it's expected to be the next big thing after Zomato. It certainly got the government looking at you guys. You've got the Traders Association saying this needs to be regulated, it's hurting the small stores, it's hurting the Kirana stores. The commerce ministers come out and said, look, we cannot take pride in the growth in e-commerce, we have to ensure that it's a level playing field. Does that concern you?
The way that we look at it today is, grocery and household essentials in India, depends on what categories you include, don't include. It's about 650 billion FY23, growing 9% CAGR. By FY29, it becomes 850 billion, right? $200 billion of just incremental consumption. Now, imagine for a moment, just like a fantasy, right? We build a business double the size of Flipkart and Amazon, talking about 30 billion in GMV, right? Even if we build a business like that, it is 1/6 of the incremental consumption from FY23 to FY29. Right? So our simple answer to that is everybody's going to grow, right? In this, modern trade is going to grow, e-commerce is going to grow, quick commerce is going to grow, Kirana stores are going to grow. And look, we also deeply believe in empowering local entrepreneurs. We've got hundreds of local entrepreneurs that run stores at Zepto.
I get the fact that you believe that the opportunity for growth and the headroom for growth is enormous from here. But let me talk specifically about the concerns that have been raised. And I would imagine that the government at some point will perhaps reach out to you guys, for consultations or perhaps not, I don't know. Some of the concerns are that, look, you're being able to offer discounts and that's putting the Kirana store at a disadvantage, that you're bypassing the aggregators and the sort of distributors and dealing with the FMCG companies directly. I mean, how do you respond to that? And if there were to be any intervention on some of these issues, how's that likely to impact you?
So two things, right? Like I mentioned, one, we are effectively running a marketplace. We've got like a couple hundred partners, and what we're doing is not really new, right? Like if you look at modern trade, e-commerce, etc., it's all pretty much the same in terms of the back-end supply chain. So I don't think it's unique to us really, like that problem statement. And two, like I mentioned, I also just think that everything that we're doing is basically like unlocking structural leverage in the system, right? Building efficiency in the system.
Yeah.
And using that efficiency to actually create higher quality jobs at scale, right? It's a miracle that a company that didn't exist 36 months ago is now employing 70,000 people. And this is quality, formal income that can be tracked. In many cases, it can be taxed, right? It is, better than the below minimum wage.
That's going to be your pitch to the government?
No, look, and I think, it's not even a pitch. Like, we're not trying to undercut. We're just trying to do the right thing. And I think the government will realize that. And our conversations with them have been productive, have been constructive. We're open to feedback. We're open to figuring out how we can make our growth more inclusive.